Hi, my name is Matt Williams with Refined Wealth Management. The purpose of this video is to inform you about ways you can contribute to your 401k and the taxes related to your contribution. This is important because it determines on how much tax you'll pay today versus how much you'll pay in retirement. This video will also cover your company match. First, a brief overview. As a summary, if you are under the age of 50 years old, your maximum contribution to your 401k in either Roth and or pre-tax is $23,000. If you are over the age of 50, you're allowed a catch-up contribution of $7,500 for a total allowable contribution of $30,500 in 2024. It is important to understand that within your 401k, you have three available contribution sources: pre-tax, Roth, and after-tax. Pre-tax contributions are made tax deductible. Potential earnings growth is considered tax deferred and are not taxed until you withdraw them after the age of 59 and a half. After 59 and a half, you will pay taxes on your earnings and contributions when you make withdrawals. This generally occurs in retirement. If you make withdrawals before you are 59 and a half, you might have to pay taxes on the entire distribution plus an additional 10% penalty. Next is the Roth contribution. The Roth 401k is an increasingly popular option. This version of the plan requires the employee to immediately pay income tax on the contributions. However, after retirement, the money can be withdrawn with no further taxes due on either the contributions or the investment earnings. Contributions are made with after-tax money, and any potential earnings grow tax-free. Earnings from a Roth can be withdrawn federally tax-free and penalty-free if it's been 5 years since your first contribution or you're over the age of 59 and a half, whichever is longer. If you make withdrawals before you're 59 and a half, you might have to pay taxes on your earnings, both ordinary, federal, and state, plus an additional 10% penalty. The last source within your 401k is the after-tax source. This is more like an invested savings account. If you contribute to the after-tax source, the amount you contribute is called the pure after-tax. And when withdrawn, it is not taxed or penalized. The growth portion of your after-tax will remain within the 401k as pre-tax money and is taxed as ordinary income when pulled for retirement. It is important to understand how these different sources can work for your retirement. By having a blend, you're able to control your taxability and income in retirement, possibly allowing for subsidized medical expenses, among other benefits. Another thing to be aware of using the after tax: if you are someone who generally maxes out your 401k plan before the end of the year, you'll want to ensure that some of your contributions go to the after tax. And know that you are allowed to contribute up to what is called the annual additions limits within the 401k. The limit for somebody under the age of 50 is $69,000 in 2024. This includes the company match, your maximum $23,000 limit for either Roth or pre-tax. The remainder could be after-tax contribution. If you're over the age of 50, the limit is $76,500. Lastly, I want to review the company match. Your current match at Chevron is 8%. If you put in 2%, the company will match you 8% on your income base and bonus. Your overtime is not matched. Within your Chevron plan, you have basic contributions and supplemental contributions. The basic is to ensure you receive your match for the full year, and you're allowed to put a maximum of 2% in to receive the full match. The supplemental is used for the amount you want to save above and beyond the 2% to get the match. For example, say your base salary or wage is 100,000 and you want to ensure to get 10,000 of your income contributed to your 401k each year. You would elect 2% in the basic source, whether that be pre-tax, Roth, or after tax. Once completing that, you then would elect a supplemental contribution of 8% to any of the three sources mentioned above. This would create a total contribution of 10% of your income and achieve the 10% or the $10,000 contribution goal. Again, I'm Matt Williams. Thank you for watching. If you have any questions around your investment sources or company match, please be sure to give us a call at 385-351-0200. You can also go to our website for more information, and we'll look forward to producing